When I said it's that simple, it really is. So we've got the moving average, which is in the purple. We've got the price data that's,
what would be
that's in the red. So normally, like depending on the time frame, it will be between a 50 and a 21. It's a short moving average because I'm a day trader, so I trade in and out quite quickly. Yeah. So now we've got this auction, right? It looks really simple when it's laid out like that, but you know, I'm throwing in what I think about that level there is really interesting when you get this, because obviously you've come in, the price has stopped there, you've got an area of congestion here, and it's come back to test it before we go down. That's the auction area in theory. So we're flowing down, we've got the auction area. Now anything that kind of comes into there and then we get a bearish candle pattern down, I mean, when I said it's that simple, it really is. So this there, the chart on the daily often mimics the 5-minute chart for me to take a trade. They normally have to look quite similar. If the daily chart is looking like this, but the 5-minute chart is looking like this, I'm actually not trading that. I'm only trading it if it's got the same kind of, 45-degree angles on the way down. I'm trying to match them as much as possible, because when we say like swim with the tide, that's what I mean. I'm only ever
say
really
if the price
with the tide.
Daily's like this, 5-minute is like this,
Yeah.
and then within your time window it starts to then do the 45-degree. Is that when it's then in play?
Correct. Yeah, because then the thing is that as well, if I change the colors on this, I'm going to reverse them. This is going to happen with that moving average, right? And then it will start going like that. Okay. So then when this price starts to catch up and get underneath the moving average, that's when I'm looking at that trade. So so the indicator isn't an indicator for me to take a trade. It's just an indicator for me to make sure, look, I'm on the right side of the tide, both directions, on the daily and the 5-minute.
Yeah, so you want that correlation between the two.
And then like bringing this all back to how it comes around with the auction is because we get data throughout the day. We get price earnings data. There may be some news, things like this. Like Cisco Systems had data last night, post-market. This is a picture that's evolving. So this week, obviously, we've got the CPI coming up on Wednesday. And then on Friday, we've got Michigan inflation expectations. Yeah. Now, Michigan inflation expectations on every calendar is normally quite low on the significance. But last time it came out, we saw one hell of a drop because it came in really high. So as this information kicks in, that's what that auction's going to do for us. If we see like all of a sudden, all of the Mag 7 dip below all of the moving averages when the underlying trends are going down anyway, we're looking to catch those bearish candle patterns that look a little bit like that in and across, right? So it is really simple. And when I mean bearish candle patterns, we could be looking at, shooting star formations, bearish engulfing candles, anything that can take the price into an underlying trend.